You know that feeling, right? When that official-looking envelope from the tax department shows up, your heart kind of drops. You open it, and it's just a sea of codes, sections, and legal jargon that feels, well, totally overwhelming. But what if it wasn't a black box? What if you had the playbook? Today, we are going to break down the entire GST demand and recovery process, step by step, so you can trade that anxiety for some real, confident, informed action. So here's our game plan. First, we're going to nail down what an assessment even is. It's the starting point for everything. Then we'll dive into what happens when an officer gets involved. After that, we hit the most critical part, the huge difference between an honest mistake and intentional fraud. From there, we'll decode those official DRC forms so you can actually understand what they're saying. And finally, we'll look at the serious business of recovery if a demand gets ignored. So let's jump in. All right, so where does this whole journey begin? You might think it's with a scary notice, but nope. It all starts with a much more fundamental concept called an assessment. Get this one word right, and trust me, everything else that follows will make a whole lot more sense. So the official legal definition is actually surprisingly simple. An assessment is just the determination of tax liability. That's it. It's not automatically a bad thing. It's just the process of figuring out how much tax is owed. And you know what? The most common type of assessment is when you're already doing every single month. And that leads us right to the absolute core of the entire GST system. It's built on a foundation of trust. Section 59 says that it's on you to self-assess your taxes, figure out what you owe, and file your return. The whole machine works because, by and large, businesses do this honestly. The department really only steps in when their data starts whispering that maybe, just maybe, that trust has been misplaced. So let's say that self-assessment system does throw up a red flag. What happens next? What tools does the tax department have? Well, they can't just do whatever they want. They have a very specific playbook they have to follow. Let's take a look at the different kinds of assessments an officer can actually launch. Think of these as the 4 main plays in their book. Provisional is when you actually raise your hand and say, hey, I'm a bit confused here. Scrutiny is like a routine checkup on the returns you filed. Best judgment is what happens when you go completely silent and just stop filing. And summary assessment, well, that's their emergency button they press to protect tax revenue in special cases. Now, a provisional assessment is pretty interesting because you, the taxpayer, are the one who kicks it off. Let's say you're dealing with a complex transaction and you're just not sure about the right value or the correct tax rate. You can file a form ASMT-01 and ask for help. The officer then gives you a provisional order, you furnish a bond, and then later on, once everything is clear, they issue the final order. It's a fantastic way to stay compliant even when things are a bit fuzzy. And here's what it actually looks like. This is the ASMT-04, the official provisional order. This piece of paper is basically your green light. It says, okay, we get it, it's complicated, pay on this temporary basis for now. It's your safe harbor while you work with the department to figure out the final correct tax liability. Okay, now let's pivot to a much more serious situation, the best judgment assessment. The name says it all. This happens when you don't give them your numbers, so the officer has to use their best judgment. Section 62 is for registered businesses that just go dark. They stop filing returns. But here's the critical part. There's an escape hatch. If you file your valid return within 30 days of their order, the whole thing gets withdrawn. Section 63 is a little different. It's for businesses that should have registered for GST but never did. Either way, the officer is going to look at whatever information they can find to make their best guess about what you owe. Okay, everyone, lean in for this one, because we've now arrived at the most critical, most important part of this entire process. If you remember only one thing from our time together, make it this. When a notice lands on your desk, the very first thing you need to look for is one of 2 numbers, Section 73 or Section 74, because which one is on that paper changes absolutely everything. You see, it all boils down to one simple, powerful question. Was this an honest mistake, or was there an intent to evade tax? Was it just a slip of the keyboard, a calculation error, or was it fraud? Was it a deliberate attempt to hide facts? Was it a willful misstatement? The law draws a massive, bright line right between those 2 scenarios. And this table just lays it all out. Look at Section 73, the non-fraud lane. It's all about honest mistakes. And notice the incentives here. If you find an error yourself and pay the tax and interest before they even send a notice, you know what the penalty is? 0. Nothing. The system is literally designed to encourage you to self-correct. But then you look at Section 74. This is a whole different world. This is for cases with fraud or suppression. The time limit for them to catch you jumps from 3 years to 5. And the penalties? They are designed to hurt. They start at 15% and climb all the way to 50% of the tax amount. This isn't just about paying the tax you owe, it's about the massive financial blow that comes with being on the wrong side of this line. So, we get the why, right? The massive difference between an honest mistake and deliberate fraud. But what about the how? How does the department actually talk to you about all this? Well, they use a specific series of documents called DRC forms. Learning to read these is like learning the official language of the tax department. Think of this whole thing as a very structured conversation. It starts with DRC01A. That's kind of like a polite heads up, a little tap on the shoulder saying, hey, we think there's an issue. Want to sort it out? If not, then comes DRC01. That's the official show cause notice. That's when things get formal. Your official reply, your side of the story, goes in DRC06. If at any point you decide to pay up, you use DRC03. And then finally, the entire process ends with DRC07. That's the summary of the final order. That's what makes the demand real and official on the GST portal. Each form has its place in the dance.
Okay, so what happens if that final order comes down, the DRC07 is issued, and the demand still isn't paid? This is where the music stops. The process moves from demand to recovery. And this is where the department's powers get really, really serious.
And trust me, the consequences of not paying are severe. They can send a DRC13 notice straight to your bank, which basically tells the bank that money in the account, yeah, it's ours now. They can issue a DRC10 to start auctioning off your business's goods. They can even move to attach your property with a DRC16. These forms aren't polite requests. They are powerful, legally binding tools for collection. The message could not be clearer. Once a demand is final, ignoring it is the absolute worst thing you can do. All right, let's just boil this all down. What are the absolute key takeaways? 1. Remember, the GST system starts with you. It's built on self-assessment and trust. 2. The department doesn't act randomly. Their assessments are triggered by non-compliance. 3, and this is the big one, the difference between an honest mistake under Section 73 and fraud under Section 74 is everything. It determines the penalties, the timelines, the whole 9 yards. 4, those DRC forms aren't just paperwork. They're the language of the entire demand process. Knowing this stuff isn't about being defensive. It's about being proactive and building a stronger, more compliant business. So we've walked through the whole life cycle, haven't we? From a simple monthly return all the way to a recovery notice. It's a complex process, for sure, but it is logical. It has rules. And that leaves us with one last, really important question. It's not about how to react when you get a notice. The real question is, now that you know the rules of the game, what are you and your business going to do differently to make sure that notice never shows up in the first place?